What is the likely legal outcome of these cases, and should we be worried as investors?
Yeah, Paul Miller, he covers the banks for FBR Capital Markets as their head of financial institutions research. Tom Gorman is also with us. He's a partner at Dorsey and Whitney and an ex-counsel in the SEC's enforcement division. Good to see you both. Thanks for joining us. From what I read, neither of you is all that impressed with these charges against B of A. You don't think they carry much weight, Tom Gorman. Why?
I think that's right. What you're seeing here is really the end of the cycle of market crisis cases. These cases, these banks have been investigated for years by the Department of Justice, by the SEC, and every other regulator in Washington. And what you've got to date is a handful of cases from the SEC, the DOJ saying there's no criminal liability, and now we've got this new residential mortgage-backed securities working group that came out of the President's State of the Union address a year ago, and they're rehashing the same old, same old. Well, the same old get you the same old results, and that's, right, I think, what you're going to see here. So
you don't think there's a likelihood that anybody would actually go to jail if the investigation produces criminal charges or convictions?
No, I think it'd be very surprising to see any kind of criminal charges here. I think what you're going to see is cases like we saw earlier this week, the SEC bringing a case against Bank of America. That's a negligence case. It's right, based on the sale of one security or one securitization, one single transaction, and that's it. And you may see some more cases like that, but you're not going to see what Congress seems to want, what the public seems to want, right, is executives going to prison, JP being indicted. I just don't think that's in the cards here.
Paul, why is that? What has taken so long? I mean, the financial crisis was 4 or 5 years ago, and this thing is still dragging on.
Yeah, I mean, it's old news. I mean, to me, it's just the Department of Justice, some guys trying to make names for themselves and trying to get the last bit of tax, a hidden tax from these institutions. You know, everybody knew what went on a couple years ago. These guys have paid a lot of money to settle with the state AGs on a lot of this stuff. You know, none of this is new. Investors know about it. They know about this possible liability out there. I don't think in the long term it's material. I just think it's headline risk, and that's all it is.
Yeah, headline risk, but I mean, we're talking about investigation after investigation on their mortgage business. You know, we're talking about pressure on capital, pressure on compensation. I mean, from an investment standpoint, do you want to be in these stocks right here, knowing that there's so much uncertainty and attack everywhere you look?
Well, you know, I'm market performing these things. I think these things had a nice run, and I think they need to pull back here a little bit. So I'm not telling people to be buying JP or these companies at these levels at all. However, investors seem not to care. I mean, what they see is an improving economy, rising rates, and possibility of earnings going up next year, not down. And what this is a little speed bump. Yeah, is it another $1 billion of litigation expense for JP Morgan? They're going to be able to deal with that and move on. They have over $6 billion reserves in on their balance sheet right now for litigation. Do they up that a little bit? Yeah, they probably do. But in the long term, I don't think investors really care.
Tom, what happened? Was there no smoking gun? I mean, we all, I mean, I'm overstating this, but plenty of people felt like there should be somebody going to jail for what happened during the financial crisis, whether it was a mortgage industry, a bank, you know, whatever it was that caused this crisis and did so much damage to the economy, but nobody has. Is there no smoking gun somewhere?
There is no smoking gun. Nobody's ever found really a smoking gun. What they found is one-off transactions, like the case earlier this week, like the case the SEC brought against Goldman Sachs, like their Citigroup case. Those are all one transaction kinds of cases. But what you're not finding is CDO after CDO after CDO where there was fraud in it. If you found that kind of systematic fraud, then you could bring an institutional case. But what you're really finding is a lot of sloppy practices, a lot of things that weren't done good, a lot of bad business judgment, a lot of things that maybe are sort of silly. But at the end of the day, silly, bad business, bad practices, bad procedures add up to the kind of problems we've got, but they don't add up to people going to jail. That's not intentional kinds of fraud. And that's why you're not seeing those kinds of cases being brought. That's just really, those documents have been picked over and picked over and picked over, and they've taken reams of testimony, and they're not finding it. They're just finding the kind of silly stuff I said.
Yeah, I guess you can't prosecute stupidity.
That's right.
Or
Thanks so
negligence,
much,
yeah.
gentlemen. Appreciate your time today. We'll see you soon.